SEED Innovations is an investment company which has exposure to health, wellness, and cannabis related enterprises. It started a share buyback program and it's told investors it's confident that there are opportunities in the short, medium, and long term. I'm delighted to be joined by the Chief Executive, Ed McDermott. So, first of all, Ed, you're in the enviable position of having an awful lot of cash, good, healthy cash balance, but we're not seeing you spend that cash. Why not?
Absolutely correct, Sarah. It's good to be talking with you again. So yes, we do indeed have a very healthy cash balance as of September 30th. Our last accounts, we announced 7.1 million of cash and cash receivables. Obviously, in that time, we've decided that our shares are so cheap that we're also buying our shares back, albeit in a sort of gentle fashion rather than a tender offer type scenario. But even relative to cash right now, we're cash in the bank and versus market cap, we're so cheap. So we're getting a sort of value accretive deal here for shareholders by buying our shares back cheap. And we're in a market where we're seeing, still quite a lot of overvalued companies. Unfortunately, there's still people who believe their companies are worth far more than they are. But it's a very, very difficult market for raising cash right now. So we feel that cash is king. But the reason that we haven't announced any major new investments is because we're being extremely thorough on our DD. The most important thing at this point is entry point and making sure that the rights of investors in a market like this are as strong as they possibly could be. And we're still getting quite a lot of companies that are sort of resistant to that. And ultimately, we don't want to waste our time or money on doing due diligence on companies that are somewhat deluded about valuation. And yeah, we absolutely have to get the right valuation. That's the number one point here.
Okay, good to hear about the due diligence and being thorough. However, this could go on ad infinitum, without us hearing about, what you're looking at. What are you looking at? Is it still that health, wellness, medical cannabis space? Because you're very good at spotting the trends of the future. Is there anything in the future trends that you're looking at?
Yeah, absolutely. I mean, we're, as hopefully lots of people will know, SEED has always been about investing in areas that are unique, nascent, very much up and coming. Cannabis was a great example of that, and it's one that we were very successful in. And of course, we're not looking per se at just cannabis. We look at all kinds of different businesses in lots of different sectors. We're very lucky that we have a very broad investment strategy. Obviously, we look at AIM right now, and AIM and the LSE, obviously domestically, that's what we have, and of course Aquis, which is lesser of importance in this conversation. But AIM is a very interesting place. Of the sort of 850 companies that are listed on there, the liquidity is very much drawn towards a few small companies. Of that 850 companies, you've probably got quite a few hundred that are sub 100 million, and of those ones that are sub 100 million, lots of them are very small indeed. And it tended to be that historically a lot of them attracted a huge amount of liquidity. You might have 20 companies at a time that had lots of liquidity. At the moment, you're seeing these tiny little pockets of liquidity, and that's kind of a bit of a casino mentality for us. We're not geared towards that way of thinking. Our goal is not to be on the soapbox every 5 minutes talking about how wonderful we are. We want to try and do that through our actions and through our investments and through the returns that we generate. And whilst we're not judging anybody for taking that kind of investment approach, as I said, we think we're in a deep value market right now, and making sure that we invest in interesting spaces, B, get our entry point absolutely right, and therefore create as much value as possible and have as much control and influence as possible. Because historically, when you look at SEED Innovations, or in its previous guise, fast forward, our best investments have come, our best returns, should I say, have come from investments where we've been heavily involved in those companies. And that's what we're trying to do. And look, we have some very interesting companies in the portfolio right now still. And, thankfully our bigger companies, i.e. the companies that we've invested, the most amount of money into, and in some cases are our biggest holdings. And I'm referring to the likes of Juvanescence, Clean Food Group, Avextra. They're all our largest holdings. So right now it would be crazy for us to invest in high value companies that are completely stupid when we've invested in good companies already, and our intention is to invest in similarly good companies, but making sure that we get the entry price right. So believe me, we've come extremely close to completing a few deals, and I can't telegraph anything on here about when you might see some deals, but I hope it's going to be very soon.
Okay, Ed, I'm going to come back to that casino stock phrase. That sounds very interesting, but let's go to Avextra. Avextra was the most recent news. It's announced a raise. So just remind us about the size of the holding you've got in Avextra and how that raise impacted SEED shareholders.
In terms of Avextra, obviously, it's worth mentioning that we took almost our entire investment out of the company in a partial exit last year. So that gave us almost all the money that we invested into Avextra. And now our position that we were carrying was at the 30th of September valued at 1.9 million. They've recently done a raise, which it's worth stressing that raise had a convertible loan already previously raised, which converted. And of course, that gave sort of effectively two different valuations. One being valuing our position at the lower end of it, valuing our position at about 2.5 million, so about a 600,000 gain, and the higher end of it being about a 1.1 million gain. Now, I want to stress that these are implied values at the moment. We've obviously got to do some work and have a sort of fair and proper valuation done on this. But obviously, it's great news. Company, one of our biggest holdings, has additional cash, which means that it's in a strong position. As I've already stressed, not having cash in a market like this is a very dangerous place to be, because companies like us are going to want to come along and say, if you want our money, we like what you're doing, but we don't like it enough to pay a silly price for it. So thankfully, and again, talk about Avextra, Juvanescence, Clean Food Group, all companies that have strong cash positions. So we feel good about those, and those are the kind of companies that we want to invest in, albeit at a very friendly valuation for SEED and its investors.
Okay, so you don't overpay for an investment into your portfolio stocks, but you did say SEED is not a casino stock. However, surely, seasoned investors know that it's a gamble parting with your cash in any company. So therefore, you possibly are a bit of a casino stock.
Well, look, I hear what you're saying, and I think, yes, there's always risk. And of course, we are investing in, typically earlier stage companies, which means generally higher risk. Obviously, the reward cycle of those kind of investments can be extremely big, but of course, in any kind of venture investing, there's huge risk. But let's look at the sort of fundamentals today. On top of our cash and receivables, which is still well over £6 million, including obviously that because we've spent money on buying back some of our own shares, and that continues, by the way. We have a sort of net asset value attached to our actual invested assets, which is around about the 7.5 million as of the 30th of September. Now, if you look at cash position alone versus market cap, we're trading well below our cash position, right? Our cash and cash receivables, I should say. And therefore, the downside is extremely low because, you're trading at less than cash. And of course, that is implying a net negative value to some of the cash and also the invested NAV that we have. So look, we think that's crazy. We think we're effectively a safe haven in a very choppy market. Now, again, you're absolutely correct. It's not to say that we are not risk-free. There is always risk whenever you invest, and I'm not providing investment advice. I'm simply providing my view on where we sit today with alongside the fundamentals of where we sit today. And look, our NAV, our invested NAV could absolutely decrease, but it could also increase quite significantly. As I've mentioned, some of those companies that we're invested in, have very, very solid management teams. They know what they're doing. They're not silly with spend. They've all obviously, worked on their treasury management, being that it's a tough market. But, any one of those companies could provide a very large increase in NAV at any point. You're absolutely right, though. Just to play the other side of that coin, there is, of course, risk attached to any of them. I also want to add that, I'm a shareholder in SEED to the tune of just over 2.25%. I haven't invested my money, well over £100,000 just for show, just for goodwill. I've done it because I believe that, I can get a significant multiple of that cash in return. So, we don't have any LTIPs, ESOPs, any kind of performance-oriented options, for example. So, I'm aligned with shareholders in the respect that my shareholding is how I will see real upside out of SEED. And I want to deliver, obviously, for reputational perspective, because I want to deliver for shareholders, but I also want to deliver for myself, of course.
Understood. But in terms of that share buyback, how long is it going to last for?
We don't have a huge amount of time left to run on it, but it's worth mentioning that we do also have a secondary approval to buy up to 15% of our shares. So our shares in issue, that is. So the board will sit down and make a call as to whether we've achieved what we want to do. As I said, the fact that we've been able to buy shares so cheap, we never expected to be able to buy them this cheap. It's been value accretive to our existing shareholders. So we're going to have a look at it and see whether or not we enact any other permissions. But right now I can't telegraph one way or another what will happen. But at the moment there isn't that long, some weeks left to go on the existing buyback.
So finally, Ed, what are the critical value drivers for SEED over the next 6 to 12 months?
Well, as I've already mentioned, we've got our existing portfolio of assets, and there are certainly some potential big drivers within the invested portfolio that could drive value. Potential sale of an asset or two. We're always looking, at any one time, anything that we own is for sale at the right price in the right circumstances, of course. We obviously are looking at lots of new investments. We're seeing a huge amount of deal flow, and we've come very, very close to making some investments. But that's not to say that there won't be news in fairly short order. And then, of course, I think general sentiment in the market, and particular sentiment towards SEED, as investors realise there really is a very low downside risk now in terms of our cash and cash receivables versus market cap, and then of course our invested NAV, which of course gives us a very significant upside. And of course significant upside could also be achieved through new investments, and of course our short-term trading strategy as well.
And I think it's also worth mentioning that you are going to be at the Master Investor Show, March the 9th, which is a Saturday, so investors can come and speak to you as well.
Yeah, absolutely. And I think we're going to have, obviously, some of our investee companies will be there. I believe Juvanescence will be there. And of course, Clean Food Group's going to be there. So I highly recommend that anybody who is a shareholder or who might have interests come and talk to the people, because ultimately it's all good and well me telling you how wonderful these companies are, but if you can actually go and meet the management, you can make up your own mind and then decide whether there's value in holding SEED. I believe that all investors should have SEED in their small cap portfolios. I'm not giving investment advice, but I certainly have it.
Ed, thank you very much, and I'll see you on March the 9th. Thanks very much.
Okay, thank you.